Welcome back to Business Week here on Arise News. I'm joined now by Arnold Dublin-Green, Chief Investment Officer at Codrus Asset Management, to review some of our top stories in more detail. Welcome to the show.
Thanks for
I almost called you Sir Arnold.
Thanks for having me. Thank you.
Inside joke. But so OPEC, let's start with the OPEC story.
Okay.
What is the strategic imperative behind this move? Is it really part of a bid to maintain market share? Or, what's the thinking behind over 500,000 barrels a day?
Over 500,000 barrels. So for me, it's a combination of market share and revenue. So, I mean, if you think about it, right, so on the market share side, you have US shale, more US shale, expecting more US shale. You have other countries pushing oil production this year. So non-OPEC countries or outside OPEC countries, like Guyana, for example.
Okay.
Guyana had about 300,000 barrels per day, 300,000 barrels per day a couple of years ago. Last year, 600,000 barrels. This year, they're expecting 250,000 barrels. And then you have Brazil pumping more. So it's a worry of losing market share and just wanting to get more online. And then on the revenue side, there's some fiscal pressures that these countries are feeling to actually get more oil revenues.
Right. So with this bid to increase production, it does mean that even here in Africa, countries like Nigeria will have to obviously contribute their share to that increase in production. Do they have the capacity to increase production?
They have the capacity, but it's just what we all know, right? Is can they increase production? I think they need to. We all need to. Because we also are facing our own fiscal pressures, our revenue pressures, so we need to. But whether we do or not is a matter of time.
Yeah. So the Nvidia story, I really love this story because over the last 10 years or more, we know that tech giants have become the biggest and most valuable companies. But the Nvidia story is so interesting because this is like the engine room of AI hardware,
it is,
right? It's chips, it's all of that. Is this really the future in terms of global domination on capital markets? That we have this hardware companies, not just tech giants like Google and whatnot, but the companies actually in the value chain at the early stages dominating. Yeah,
definitely. I mean, first of all, $4 trillion market cap is huge. Right? That's bigger than the GDP of France, UK,
Incredible,
Spain, Italy.
If you put it like that.
It's absolutely wild. And my first reaction, especially as a market participant, is $4 trillion. This is too expensive. It's too much. And you look at the fundamentals of Nvidia.
What,
right?
overvalued?
Overvalued, right? So you see price to earnings 50 times, price to book 48 times. Put that in perspective, Tesla's price to book is 15 times.
Okay.
So this is huge.
This is
right?
massive, yeah.
But then you look at Nvidia, right? And you also see, and you look at Nvidia as a growth story, like you rightly mentioned, AI infrastructure, robotics. Right. And Nvidia is building infrastructure not just in the US, but outside the US, in the UAE, in Saudi Arabia. You have a Chinese demand as well for Nvidia products. So you see the growth story coming along, right? And then on the growth side, you go back to the fundamentals of Nvidia. You have revenues of last year, revenue was about $60 billion. This year is expected to more than double to about $130 billion, going into $200 billion in 2026.
Those are incredible figures.
It's incredible figures, incredible growth.
Is this?
In my view, it is. It is. And then going back to the fundamentals, right? There's a fundamental metric that I like to use that compares your price to earnings to your growth, which they call the PEG, right? So it's price to earnings divided by the growth. And when you actually look at Nvidia from the growth perspective on the fundamental side, you actually realize that a $4 trillion market cap is still quite cheap.
Okay,
right? Because you're looking at an 8 times earnings per share growth over a 2-year period or 5-year period, which is massive.
So essentially you're saying there's still considerable upside.
Yes, considerable upside on the growth side, right? So if you believe the growth story, if you believe the AI story, which we all believe, if we all believe that in 5 years and 10 years, AI robotics will take over the world, which we are slowly getting our heads around to, then you believe in Nvidia story, then $4 trillion market cap is nothing.
Look, I'm a believer, but I worry about whether this momentum will be derailed by regulation.
Okay.
Some of the China-US tensions, we see the tech wars, fears around espionage and all of that. How do you think that might impact this momentum?
So that's the downside, and you've rightly mentioned again, right? So in April, when the Trump trade tariff tantrums kicked in, Nvidia lost massively in terms of share price.
Sure.
And one can say they've shrugged it off. I guess the whole market as a whole shrugged it off because the whole market got tired of Trump's tantrum. But regardless, you still see that China needs Nvidia products. Saudi Arabia, they struck this massive deal in Saudi Arabia when they were there in May, when Trump was there in May. So you can still see the rest of the world actually looking at Nvidia. I mean, if you also look at the revenue expected revenue in terms of revenue ratio geographically, it's about 50-50, right? 50% US, 50% the rest of the world. So there's still the need for Nvidia with the rest of the world, and it's showing in the
interesting.
The price.
I mean, it's one story that I just love to follow because I just think incredible. When I was in university, we were talking about ExxonMobil and Co. topping market valuation. Now those guys are nowhere to be seen. But let's move into an alternative asset class, Bitcoin. So what we're seeing with this pricing, is it like a hedge against macro uncertainty, or is it a genuine belief in crypto offering a good alternative asset class?
So Bitcoin is interesting, and for me, it's even more interesting over the past year. I have seen Bitcoin go from a fringe, esoteric, or let's say fringe asset to a digital gold. And let me explain. Right. So about a year ago, August last year, the US finally allowed Bitcoin to become an ETF, an exchange traded fund. And this was August 2024. When that happened, you saw BlackRock get involved, Fidelity get involved, which sort of gave it a stamp of approval. And then late last month, JP Morgan announced that they will now accept this Bitcoin ETF as collateral.
It's incredible.
Right, so now puts it in the same space as a stock and a bond, right? Because now you can actually go hand in your Bitcoin ETF and get a loan.
Full bragging rights for Bitcoin.
Full bragging rights, right? So this is the first one. And then number two, on the macro side, you have the US debt balloon, you have uncertainty with US structural change, right, with US treasuries, and you have a potential Fed easing of the hike or tightening US Fed reserve rates that we've seen. So all of a sudden, everyone's looking for other asset classes. Gold is one that has always been.
I know you love your gold. I was just waiting.
I'm huge on gold. But then you have the younger generation that actually like cryptocurrency, and then Bitcoin falls into this. And then there's a momentum play. So we saw Bitcoin go from $70,000 to $80,000. It went as low as $70,000 earlier this year, and then once it went through $80,000, there was a huge momentum play. You know, Bitcoin's very loud. If it crosses 70, the whole world looks. Crosses 100, everyone looks. So you have that momentum play. So for me, it's a three-pronged approach. It's a change from a fringe asset to a digital gold that we've seen on the ETF creation, and then it's a macro play, and now the momentum play.
Interesting.
So Bitcoin,
I knew there was a turning point when the institutional investors piled in, especially with the ETF coming on. But is there a risk to this in terms of central banks thinking about their own digital currencies? Is there any prospect of even competing or coming as close to the Bitcoin?
Yeah, so for me, right, this is why Bitcoin will not rival gold as a structural play that I like so much. Is Bitcoin is still very much seen as American. And the gold trade is a diversification away from US that we saw when Russia and Ukraine started and the US decided to sanction Russian assets, and everyone said, hey, what's going on? I need to diversify away from US. So Bitcoin still has that little bit of the US can easily have a play in this. So this for me is the downside risk to Bitcoin, where I still like gold, but I think Bitcoin is not one to frown on. I think the momentum still holds, and I think Bitcoin, this change still works.
I don't think gold can ever come off the top of your leaderboard.
It won't.
But interesting, Trump did say something about some strategic reserves of Bitcoin at one point. I don't know how far they're really going to take that for. But let's come back locally. Naira stability.
Naira.
Yeah.
So Naira is a shock. Sorry, I'm going to put you. Naira is a shock, right? Because I think when we all started the year, listen, we all knew Naira was undervalued, right? We all knew Naira at 1,500 is undervalued. Naira at 1,600, 1,700 is undervalued. But Naira for me and for a lot of investors is an oil story, and has always been an oil story. But the shock came in when we saw huge oil volatility through the same thing, Trump tantrums, Gaza war and everything. And oil went from $60 up to 80 and back down to 60. And the Naira held. Didn't just hold it, actually, Naira actually strengthened.
Right.
One could actually argue, yes, it was, we're in a weaker weaker dollar environment because Trump wants a weak dollar and the world expecting a weaker dollar. But what's interesting to me is Naira actually strengthening faster than a few other currencies that I also look at. Which is very interesting. And then, so for me, it's a few things are at play. It's finally we all agree that the Naira was undervalued and needs to strengthen a bit more. But we also saw some foreign portfolio investor inflow
Yeah.
in terms because of the interest of our assets, right? Our stocks are cheap, our bonds are cheap, our treasury bill yields are
So
high.
are we likely to see a piling in of portfolio inflows into Nigerian equities and bonds?
I think so. My worry, though, is we're seeing this piling coming in, and then we're seeing our yields really dampen. Yields are going to dampen a bit more as we expect NPR to come in a bit lower. Maybe the next or central bank meeting.
So you're expecting a downward trend?
We are. Yeah. So that might make our assets a bit less attractive, but on the stock side, it's still cheap. So on the equity side, still attractive. But I suspect that as the year goes on, we might see Naira weaken a little bit. It's about 1,550 or so now today. We might see it go get up to 1,650. But I think for the rest of the year, I see a weakening of the Naira, a slight weakening of the Naira.
The final question I have for you on this is really how this translates into actual consumer relief.
Okay.
On the streets, on the ground, in terms of prices. Are you seeing, because there's obviously that transmission mechanism between the exchange rate and inflation and other things, but do you see any sort of effects?
So, you've said it right. So inflation. So if our currency is strengthening, we should see an easing of inflation, and that's how we should see. So going into a stronger disinflationary environment, which we already are, right? So we started the year about 24-25% inflation. It's about 22% inflation. I suspect we probably see it go down to about 19% by the end of the year or the end of Q4. So for the man in the street, it should make things a bit easier. Okay, great. Great talking to you, Sir Arnold. And, congrats on your debut appearance on Business Week, because I haven't had you on the show.